Hi, this is Buddy Blackman from the Fayetteville Real Estate School making another video to assist you with math for the pre-licensing course. Let's share our screen right here. And today we are doing section 9 of the original math book, taxes and revenue stamps, property taxes. All right, property taxes. Now, I believe it was in section let's see what section this was. In section 3 is qualifying the buyer, section 4, market analysis, and then section 5. In section 5, we did real estate property taxes. And that is taxes, the real property taxes that the seller and the buyer are going to have to pay at closing. Because remember, real property taxes start on January 1 of every year and go to December 30th as far as real estate class is. All right, 30 days in a month. So when a property closes in the year, then the buyers and sellers have to take care of the taxes at closing. And so that is that section. But this section is how you actually compute the annual taxes that the county or the city are going to charge the owner of the property. We're also going to talk about revenue stamps, and we'll get to that in just a minute. Let's go here on our screen. And section 9, taxes and revenue stamps. To figure ad valorem taxes. So if you look in your textbook, you'll see ad valorem taxes. That's the Latin for real property taxes. Real property taxes. In North Carolina, you divide the assessed value of the property by 100. And that is a key to this is the assessed value. The assessed value is the tax value. It's the value that the tax man gave to your property. Now, some of the problems are going to say the house sold for $200,000. The assessed value is 80% of that. So you're first going to have to compute the assessed value by multiplying the sold value times the assessed times the 80% to get the assessed value of the property. All right. And so once you have the assessed value, divide that by 100 and then multiply by whatever the tax rate is. And that will give you the annual tax amount. If the question is asking, you have to be very careful reading these questions, because if it asks you what the monthly escrow tax amount is, you're going to have to take that annual tax amount and divide it by 12 to get the monthly. All right, so here's a sample right here. A home is valued at $87,000. So we're gonna assume that is the assessed value. So the assessed value is $87,000. All we do is divide it by 100. This is North Carolina taxes only. On the state exam, you will not have a national tax problem. In fact, I don't think you have any math problems on the national portion of the license exam. You will have a tax problem on the North Carolina. So we're only talking about North Carolina taxes right here. In the textbook, we cover national property tax. You divide by 1,000 and you use the mill rate. You do not do that in North Carolina. In North Carolina, you take the assessed value, which is 87,000, divide it by 100 and multiply times the tax rate. So 87,000 divided by 100 equals 870. Multiply that by 1.15, which is the tax rate, and that'll give you the annual taxes for that certain property. If the question is asking for the monthly, you then divide it by 12. All right. So let's see the next page here. Revenue stamps. So you need to write this down in your side notes that the problem could say revenue stamps or it could say excise tax. They mean the same thing. All right. Revenue stamps and excise tax, they mean the same thing. What is the definition of revenue stamps or excise tax? It is a tax paid by the seller at closing. It is a tax paid by the seller for selling his house. Isn't that something? They're taxing him for selling his house. Revenue stamps, excise tax is a tax paid by the seller at closing by the seller. So here, the rate, and this is a statewide North Carolina rate, is $1 per 500. All right. You have to remember that you first have to round up to the nearest 500. Now, in this sample that we're showing on the screen right now, is 97,000 is the price the home sold for, not assessed value, not is the price you pay the tax on what the home sold for. It sold for 97,000, so we do not have to round it up. If it sold for $90,001, we would have to round that up to 97,500. If it sold for 97,999, we'd have to round that up to 98,000. But in this instance, with this sample, 97,000 divided by 500, we don't have to round it, divided by 500 equals 194, and that is the price of the tax, the excise tax that the seller is going to have to pay. All right, so let's get a sample problem here. A home is assessed at 80%. All right, so it sold at 88,000, but the assessed value, and that's what we need to compute the North Carolina tax. So we're going to take 88,000, multiply it by 80%, times 80 and hit the percent key, and we get the assessed value of 70,400. Now we just take that amount, divide it by 100, and multiply it times the tax rate, which is 0.75. And let's take a look here. There it is, 88,000 times 80% equals assessed value of 70,400. We divide that by 100, multiply that by the tax rate of 0.75, and the annual taxes for this property is $528. All right, let's look at another one. A home is assessed at 65,000. So it gives us assessed value right there. The tax rate is 1.15 per 100. So we just use the formula, 65,000 divided by 100 times 1.15. The annual tax for that property is $747.50. All right. Again, you can rewind this, look at me do the problems again, look at the answers. These are the problems that are in your math workbook. The assessed value of a home is 72,000. The tax rate is $1.34 per 100. What is the monthly? Here's the key. Here's where they're trying to get you to mess up. And on the test, it's all this is multiple choice. If you do the problem wrong, that wrong answer will be one of the multiple choices. So if there's a way to do the problem wrong, here we can read what is the monthly. So we already know once we get the answer for the taxes, the annual taxes, we need to divide it by 12. 72,000 is assessed value. We divide it by 100, multiply it by $1.34, and we get $964.80. But it's not asking us for the $964.80. The $964.80 will be one of the multiple choice answers. So don't let this get you wrong because it's asked for the monthly amount. So we're going to divide that by 12. The answer is $80.40 for the monthly taxes on this property. All right, now we're going to do some revenue stamps, excise tax. It means the same thing, problems. A home sells for $123,400. Remember, the taxes is based off the sales price, no longer the tax value. It's the sales price for the revenue stamps or excise tax. What is the price of the revenue stamps needed? Paid by the seller at closing. All right, now if we look at the number 123,400, it is not an even number. In other words, it is not all zeros, and it's not 500. So we're going to have to round this to the nearest. We always round up. You never round down. You always round up. 123,400 will round up to 123,500, and then divide by 500, and your answer is 247. Your answer for excise tax and revenue stamps will always be a whole number. There will be no decimal places. If you have decimal places, then you didn't round. All right, always round up the sales price. All right, let's look at another one here. A home sells for $54,000. The buyer gets a $40,000 loan. How many revenue stamps are needed? Now, in these questions on the test, they're going to throw what I call junk into question. Information you do not need. You don't need to know what loan the buyer is getting in this problem. You're figuring out the revenue stamps or excise tax for the seller. Has nothing to do with the buyer. So the buyer gets a $40,000 loan. We could care less because that's not the information we need. We need the home sold for $54,000 and how many revenue stamps. Does $54,000 need to be rounded up? No, it does not, because it's all zeros, so it does not. We're just going to take the 54,000, divide it by 500, and there we go right there. 108 revenue stamps or excise tax, 108. Paid by the seller, very important. Tricky, tricky, tricky question. I did this one the other night last week in class, and the first three people asked, they got it wrong because they didn't read the question carefully. A home sells for 255,000. How many revenue stamps must the buyer pay at closing? The answer is 0, because the buyer does not pay revenue stamps or excise tax. The seller pays it. And how much revenue stamps must the buyer pay at closing? The answer is 0. None. The seller pays revenue stamps. All right. Now, you will have a question like this. You have to be very careful. You have to read these questions carefully, because there is county tax and there is city tax. If a house is located in the city, he will have to pay city and county tax. But if a house is located in the county, not in the city, he will only pay county tax. All right, so read this question. A home is located in the county. It is not located in the city, but it's giving us the city tax rate of 1.3. We just ignore that because the house is located in the county. The assessed value is 90% of the sales price of $295. So we know that we need this assessed value. So we're going to take the $295, multiply it by the 90% to get the assessed value, divide it by 100, and only multiply it by 0.70, which is the county tax rate. What are the annual property taxes for property? And here we go. 90% of the sales price gives us an assessed value of $265,500. We divide that by 100, multiply it by the tax rate of 0.70. We get the annual taxes of $185,850. Home is not in the city. City tax is not used, but it's going to give you that in the question. You're going to have a question like this on the test. You have to be very careful of where the house is located, or that wrong answer is going to be in your multiple choice. All right. And that is it for taxes and revenue stamps. We actually went through all of the math problems on taxes and revenue stamps. Remember, this is ad valorem property taxes, but this is computing the taxes for the year for the buyer or the seller. In section, was it 5? In section 5, we're doing property taxes that the buyer and seller must pay at closing, because these taxes that we're computing right here must be paid at closing. And that's counting the seller days and the buyer days and so forth. So you can go back and look at that video also. And we have other videos located on our YouTube channel, Fayetteville Real Estate School. Go there, watch these videos, learn how to do this. This is the same presentation I do in class. Stop it, rewind it, get it done. Good luck to you, and I will see you in class.